There is a date every XRP, HBAR, and XLM holder needs to understand right now. August 7. Not because a magic switch gets flipped on that day. Not because XRP suddenly goes to $10, HBAR instantly does 10x, or XLM becomes the new king of global payments overnight. And not because the Clarity Act automatically turns every crypto asset into a commodity the moment Congress says a few words. That is not how this works. But August 7 matters because it is the final major window before the U.S. Senate heads into its summer recess. And the bill that could reshape how digital assets are regulated in America is now running out of time. The Digital Asset Market Clarity Act is supposed to bring structure to a market that has spent years trapped between unclear rules, lawsuits, contradictory guidance, and regulatory uncertainty. For XRP holders, that story is obvious. For HBAR holders, it could affect how enterprise blockchain and tokenization are viewed by large institutions. For XLM holders, it could matter for stablecoins, payments, and tokenized financial products. But here is the twist. The countdown is real. The urgency is real. But the outcome is not guaranteed. Senate Majority Leader John Thune has already said the bill is likely to miss its main chance of being completed before lawmakers leave for the summer break. He still wants to begin the Senate floor process before the recess, but there is a huge difference between starting the process and finishing it. And that is why this video matters. Because right now, the crypto community is dividing into two groups. One group thinks this is the final chance for XRP, HBAR, and XLM to explode before the end of the year. The other group thinks the delay means the entire bullish case is dead. Both sides may be missing the bigger picture. Today we are going to break down what is actually happening, what the Clarity Act can and cannot do, why the next 10 days matter, why a delay is not the same thing as rejection, and what XRP, HBAR, and XLM holders should realistically watch next. Because if you understand the timeline, you can avoid two of the biggest mistakes in crypto: buying purely because of hype, or selling purely because of fear. Let's start with the headline everyone is talking about: the 10-day countdown. The Senate's working window is closing as lawmakers approach the August recess. August 7 has become the key political date because passing major legislation before the break would give the bill stronger momentum for the rest of 2026. But August 7 is not a legal deadline. The bill does not disappear if it is not passed by then. XRP does not become illegal. HBAR does not lose its technology. XLM does not stop processing transactions. It simply means the legislative path gets slower, more political, and more uncertain. And in markets, uncertainty has a price. When traders expect an event by a certain date, they position for it. When that event is delayed, some of that positioning can unwind. That can mean volatility. That can mean sudden fear. That can mean people screaming that the entire narrative is over. But this is where experienced investors need to separate the chart from the thesis. A delayed catalyst is not necessarily a canceled catalyst. And a short-term price reaction is not always the same thing as a long-term fundamental outcome. Now, what exactly is the Clarity Act? The official name is the Digital Asset Market Clarity Act of 2025, also known as H.R. 3633. Its purpose is to create a clearer regulatory framework for digital assets in the United States. The most important concept is the distinction between digital commodities and investment contracts. The bill is designed to clarify when the Commodity Futures Trading Commission, or CFTC, would oversee a digital commodity, and when the Securities and Exchange Commission, or SEC, would retain authority over an investment contract. That may sound technical, but it is actually one of the biggest questions in crypto. For years, projects have been operating in a confusing environment. A token could be widely traded. It could power a public blockchain. It could be used for transaction fees, security, liquidity, governance, or settlement. But regulators could still argue that the token was sold or used as an investment contract. That legal uncertainty makes institutions cautious. It makes exchanges cautious. It makes banks cautious. It makes asset managers cautious. And it slows down innovation inside the United States. The Clarity Act is not a law that simply prints the words XRP, HBAR, and XLM are approved on a piece of paper. That is not what it does. It does not guarantee that any specific asset receives a permanent label overnight. It does not guarantee ETF approvals. It does not force banks to use XRP, HBAR, or XLM. And it certainly does not guarantee higher prices. What it could do is create clearer rules for the overall market. That is the difference. And it is a huge difference. Clearer rules can make it easier for exchanges, custodians, funds, payment companies, and institutions to decide what they can do, how they can do it, and which regulator is responsible. That is why this bill matters. Not because of a one-day price pump, but because of the possibility of a more mature market structure. Now, let's talk about why the legislation is not finished yet. To become law, the bill still has a long path. It needs to advance through the Senate. It would require a 60-vote threshold in the Senate floor process. It would need to be reconciled with the version already passed by the House of Representatives. And then, it would need to be signed by President Donald Trump. That is why anyone telling you the bill is basically done is oversimplifying the situation. It may be closer than it was before. Momentum may be stronger. The bill may be formally eligible for Senate floor consideration. But eligible for consideration is not the same as passed. Politics is not a straight line, especially when the subject involves market regulation, stablecoins, decentralized finance, enforcement powers, ethics rules, and the future division of authority between federal agencies. There have been disagreements over provisions related to ethics, developer protections, stablecoin yields, and the specific boundaries of regulatory power. Those debates matter because they can determine whether enough senators support the final language. And without enough votes, there is no law. So what happens if the Senate does not finish by August 7? There are three major scenarios. Scenario number 1 is the positive surprise. The Senate begins formal floor action before the recess. Maybe it does not finish every step, but it gets enough movement that the market sees the bill as alive, active, and politically important. That would not be a final victory, but it could reduce fears that the bill has been abandoned. For XRP, HBAR, and XLM, that could support the broader regulatory narrative. Scenario number 2 is the likely middle path. The bill does not receive final passage before the break, but negotiations continue and lawmakers return to it after the recess. This would probably disappoint traders who expected an immediate decision. There could be volatility. There could be frustration. There could be headlines saying, "Crypto bill delayed again." But the core question would remain unchanged. Is the legislation still moving forward? And do enough lawmakers still want a market structure framework? If the answer is yes, then the delay changes the timeline more than it changes the long-term opportunity. Scenario number 3 is the bearish one. The bill stalls completely. Political disagreements grow. Lawmakers lose urgency. The final text becomes too difficult to pass, and the market starts pricing in a much longer wait for regulatory clarity. That would not destroy XRP, HBAR, or XLM, but it could remove one of the strongest near-term catalysts from the market. And when a market loses a near-term catalyst, prices can become weaker, more volatile, and more dependent on Bitcoin, macro conditions, liquidity, and broader risk appetite. Now let's look at XRP. XRP is probably the asset most sensitive to regulatory headlines in this group. That is not because XRP is the only token connected to regulation, but because the XRP story has been connected to legal clarity for years. The market has watched the Ripple case. It has watched exchange listings and relistings. It has watched every major statement from regulators. It has watched the development of the XRP ledger. And it has watched Ripple build around payments, liquidity, tokenized assets, and stablecoin infrastructure. Ripple's RLUSD stablecoin is issued on XRP Ledger and Ethereum, and it is designed to maintain a stable value equal to $1 dollar. That does not mean RLUSD automatically creates massive demand for XRP. We need to be careful here. A growing stablecoin ecosystem is positive for network utility. But utility, adoption, and token price are not always connected in a simple one-to-one way. Still, clearer regulation could make it easier for more institutions to evaluate the XRP ecosystem without worrying that the rules will change later. For XRP holders, the biggest question is not simply, will the Clarity Act pass? The deeper question is, if clearer rules arrive, will more institutional capital decide that XRP is worth holding, using, or gaining exposure to? That is the real long-term bullish scenario. HBAR has a different relationship with this story. Hedera is not trying to win by becoming a copy of Ripple. Hedera's case is built around enterprise infrastructure, tokenization, digital identity, compliance-friendly systems, predictable fees, and real-world applications. For HBAR, regulatory clarity matters because large companies often move slowly. They do not simply chase a chart. They need to understand the legal environment. They need to understand custody. They need to understand reporting. They need to understand what is allowed and what is not. The clearer the framework becomes, the easier it may be for enterprises and financial institutions to move from experiments to larger real-world deployments. But again, that does not mean HBAR gets a 10x because a bill moves forward. HBAR still needs proof. It needs visible adoption. It needs sustainable activity. It needs economic demand. And it needs the market to understand why that demand should translate into long-term value for HBAR. That is why HBAR may offer more asymmetric upside than XRP. It begins from a smaller base, but it also carries more uncertainty. XLM is the third piece of this puzzle. Stellar is positioned around global payments, stablecoins, financial access, and tokenized assets. Stellar reported more than $2 billion in on-chain real-world assets and $5.5 billion in stablecoin payment volume during the first quarter of 2026. That is important because the future of crypto may not be defined only by trading. It may be defined by digital dollars, tokenized funds, private credit, payments, settlement, and financial assets moving on-chain. Tradable also announced plans to bring up to $1 billion in tokenized private credit assets to Stellar. That is an announced plan, not $1 billion already live on the network, but it shows where the ecosystem is trying to go. For XLM, clear U.S. rules could help the broader stablecoin and tokenization narrative. But just like XRP and HBAR, XLM is not guaranteed to benefit in a direct or immediate way. The market can recognize good fundamentals slowly, sometimes painfully slowly. That is why this next 10-day window matters so much. Not because the final answer must arrive in 10 days, but because the market will decide how it feels about the timeline. Will traders believe the bill still has momentum? Will lawmakers show that they are willing to keep working? Will the final text become more visible? Will Senate leadership give a stronger signal? Will the market focus on what happens after the recess rather than panic over what did not happen before it? These are the questions that matter. And here is what you should watch, instead of random social media rumors. Watch for an official Senate floor schedule. Watch for the release of updated legislative language. Watch for cloture procedures or formal votes. Watch for statements from Senate leadership. Watch for confirmation that negotiations are continuing. And watch for whether the Senate and House versions are moving closer together. Do not treat a viral tweet as law. Do not treat a screenshot as a Senate vote. Do not treat a politician saying, "We are close," as final passage. Crypto is full of people who confuse a possibility with a certainty. That is how they get trapped. Now, here is the most important part of this whole video. If the Clarity Act gets delayed, it does not mean you have to panic. And if it moves forward, it does not mean you have to chase green candles. Both reactions can be expensive. The real advantage is knowing your own thesis before the headline arrives. If you hold XRP, ask yourself whether your thesis depends entirely on one bill or whether you believe in the longer-term payments, liquidity, and digital asset infrastructure story. If you hold HBAR, ask whether you believe enterprise adoption and tokenization will become measurable enough to create lasting demand. If you hold XLM, ask whether stablecoins, tokenized assets, and global payments will become important enough for the market to stop ignoring Stellar. If your thesis only works if a single vote happens on a single day, then you may not have an investment thesis. You may have a trade. And there is nothing wrong with trading. But you should know the difference. Because trading requires timing. Investing requires patience. And confusing the two is how people buy tops, sell bottoms, and blame everyone except themselves. So here is the bottom line. The next 10 days are important. August 7 is an important political checkpoint. But it is not the finish line. The Clarity Act still faces a difficult path, and final passage before the recess is now unlikely according to Senate leadership. XRP, HBAR, and XLM could all benefit from a clearer U.S. market structure over time. But none of them is guaranteed to rise because of a headline. The opportunity is real. The uncertainty is real. And the timeline may be changing right in front of us. So do not let panic make your decisions for you. Do not let hype make your decisions for you either. Watch the facts. Watch the process. Watch the official documents. And remember that in crypto, the people who understand the difference between a delay and a defeat are often the ones still standing when the real move begins. Now, I want to hear from you. Do you think the Senate will start the Clarity Act process before the August recess? And if the bill is delayed, which of these three do you think holds up best? XRP, HBAR, or XLM?